Precious metals are a few of the only commodities or assets on the planet, especially those that have a historical context, that are not simultaneously someone else's liability. There's no counterparty risk.
Right.
And that's a big deal here in terms of, you look at cryptocurrencies in your own possession, you look at precious metals, they both have the same thing, a lack of counterparty risk. And that's certainly very, very important. To me, it's not about becoming wealthy. Todd, I mean, gold and
Right.
silver to me are wealth. Of course, if you own enough, arguably you're wealthy, but we own it because the dollar is being destroyed right out from
Yes.
under us. They've printed more money, we have, the Federal Reserve and the Treasury, in the last 4 years than in the history of the country preceding it. You mix that in with suppression of interest rates for a decade, creating anomalies in asset prices.
Right.
And I think when you see the bond market, which is for big money, the traditional form of savings, have its worst year ever in conjunction with the central banks, the most knowledgeable and most well-funded traders on the globe, buying more than any time ever. There's no coincidence here. So I think what you are seeing is a system under strain, under stress, with great uncertainty, and really a world that is looking to dollar alternatives. The bottom line is you own gold because it is wealth that has outlived everything the world's ever thrown at it.
Yeah.
German hyperinflation, the Great Depression, everything that's ever happened. And yet it's significant enough, irrespective of its dollar-based price, where the biggest money in the world is on a buying spree. I think that's very, very, very important, that we are being misdirected into traditional financial assets as the rest of the world's elite quietly tiptoe into the world's only other
That's right.
one reserve asset, that being
Yeah.
gold. We saw the bond market over the last couple of years represent probably the worst bond market, bear market in history. And I
Okay.
think it's no coincidence that the worst year ever for US Treasuries also saw the highest central bank gold buying in over 55 years. And if you take a look at what they're doing right now as we speak, on top of them buying more gold over any time, literally in the last, well, ever, really, those numbers are up 18% this year. I think it's 18%.
Wow.
Year over year, they've bought over 800 tons already in the first 9 months of this year. So you have not only the most well-informed, but the most well-funded traders on the globe who are continuing to put a floor under the price of gold. Junk silver is fine for those people who don't know what it is. It's dimes, quarters, and half dollars, minted prior to 1965.
Mm-hmm.
It's slightly more subjective than other forms of silver, and subjective is not even the right word. It is there. People don't really understand that dimes and quarters and half dollars that are dated 64 and earlier are 90% silver by weight. And even
Yeah.
with that said, how much silver is in a dime or in a quarter? Now I could tell you, but most people don't get that. If you realize that there's 0.00715 ounces of silver in a dime, 14 of them is almost exactly an ounce, pure
Okay.
silver. Um, little less straightforward. If it were me,
Yep.
what I would buy, and especially right now, because you have many states in America that are passing laws that are allowing gold and silver legal tender coins issued by a sovereign government. Most of them say any sovereign government. And
Mm-hmm.
the ones that really count would be the United States, Canada, Austria, Australia, South Africa, and the United Kingdom. And you have states around the country, Idaho and Wyoming and Missouri and North Carolina and Oklahoma and Arkansas and Texas and Alaska and on, that are saying this can be used as legal tender for all debts, public and private, including paying your property taxes. And most of the states read it as the melt value of these coins plus any perceived market premium. The lesson is one that I learned as a 19-year-old kid. The greatest gift my father ever gave me. We started this company together in a one-room office, the
Mm.
size of a closet. We borrowed $60,000 from my dad's best friend. He's the Franklin and Miles Franklin. My dad's middle name is Miles. My
Awesome.
parents sold their life insurance policies. We were the least likely cast of characters to have succeeded to get to where we are here. 34 years later, this February, 9 billion in sales. Somehow, by the grace of God, we did it.
Unbelievable.
But what he said to me was, Andy, there's one rule and only one rule. If you don't follow it, I'll fire you. Now, I was 19 at the time. I'm like, all right, Dad, I can deal with what's your one rule. It says you're gonna buy something like this every 2 weeks. I don't care if it's one coin. I don't care whatever it is. You will buy every time you get paid. You will buy some gold and silver. Period. Now, I've
That's
owned the
awesome.
company more or less outright for over 2 decades, but
Yeah.
I've honored my promise to him. And every 2 weeks for 34 years, I have bought something. And
That's
it's
cool.
amazing when you let the laws of compounding work for you and you accumulate wealth methodically. And,
Right.
wealth, and that's how you get ahead. You pay yourself first. Just like building your credit score. If you don't continue to go into debt, your credit score falls. You have to pay that debt off. But, I was fortunate enough through saving my rear end and working in this industry for 34 years that I don't have much in the way of debt. And my credit score is not 800. But why? Why wouldn't it be if I don't have debt and I have savings and a good, decent income? Why? Well, because you have to continue to go into debt and pay it off. We're incentivized to go
Yes.
into debt. That's what we all are taught. This is the way you do it. Get your
Yeah.
credit score up, go into debt, pay it off. The point of it is that what they should really be teaching us is not to go into debt, but to let the laws of compounding work for us instead of against us. Don't go into debt. Rather, pay yourself first. Get ahead. The
Yeah.
BRICS, China, Russia, India, South Africa, now Saudi Arabia, Iran, United Arab Emirates, Egypt, and Argentina, and the 27 other countries that have formally expressed interest, and the 22 others that have informally. Well, they do things methodically. Anything is done over time and done with
Yeah.
thought and
That's right.
methodically. There is no shortcut to building a
No.
pathway through your backyard or to
Yeah.
building a new world reserve currency or to
That's
doing
right.
anything that has lasting effect. I think one of the things I want people to understand is that when people hear decentralization, they think cryptocurrencies. I want people to understand that
Yes.
cryptocurrencies and precious metals are, let's call them first cousins. They're
Yeah.
they're
That's right.
they're cut from the same ideology.
Mm-hmm.
It doesn't have to be an either or, it should be both. And I think they
Yes.
both belong, especially now in people's portfolios. And the reasoning and the ideology is so similar that we should all be on the same side. We should be united.
Yes.
We shouldn't be divided, which gets me
Yeah.
into a whole nother subject about this country. But in terms of the way that these two communities interact, they're the same message. The only deviation to me,
Yeah.
and I would argue that if I were going to give any advice to the crypto community, it would
Yep.
simply be this: the difference in the way that I think we look at things. We look at things based upon the same data points and metrics: decentralization, government overreach,
Yes. Inflation.
currencies, all of that stuff, right? Precious metals to me is not about getting wealthy. It is wealth. The cryptocurrency community, I think, thinks more about wealth appreciation. Precious
Indeed.
metals think about wealth preservation. So the way that they marry one another is the wealth appreciation siphon some of that appreciation off and put it into wealth preservation.